The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Monday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN just after 9 a.m. Eastern Time. We got about 24 minutes to go into a shortened trading week. Markets closed on Friday for Good Friday. We all get a 3-day weekend. What's interesting is Friday, we get one of the most important data points of the month as we get core PCE, the Fed's preferred inflation gauge. Markets will be closed for that. We'll see how we react coming into that number. S&P's right now negative by 15 points as we kick off the session. Pretty interesting when you take a look at the acceleration we had in the markets. There's your Wednesday action on the Fed. You drive up to 53.22 from a price point of about 52.35 coming into that Fed announcement last Wednesday, and we've given up about 50 points from that high, and you see kind of a steady decline of lower lows and lower highs since that spike high on Thursday, middle of the day, following the Fed on Wednesday. This morning, we kick things off in negative price action with the S&Ps off by about 0.3%, negative by 15 points, trading at 52.77. NASDAQ 100, we're negative by about 100 points. That's more than 0.5% in the red. Pretty similar action. You spike higher from Wednesday into the highs of Thursday of last week, 18,709, just like that. NASDAQ 100 giving up about 240 points. From that high, we're trading at 18,470. Dow, negative by 55 points, 39,813. So much for your Dow 40,000 hat. We got there in the futures, did not get there in the cash, and now we have a ways to go. 39,813 in the futures right now. And when you're talking about cash, what are we talking about? Yeah, we'll pull it up as the market opens. Russell right now, barely in the positive by 2 points, trading at 2,096. Bitcoin with a nice weekend. It's always interesting, right, where you open the futures on the weekend. In terms of Sunday, Monday, Bitcoin very active on the weekend sometimes. This weekend, that is the case as you're up more than 5%. You're back above 67,000. You're up by $3,275. Bitcoin, 67,250. Crude, yeah, just in the last few minutes even. Check it out. We're on a 5-minute basis. Crude was just trading at 80.80. We're back above $81. Crude chopping around. We're up by 50 cents on the session right now. How about gold? We got a little bit of dollar weakness this morning. You have gold up by about $16, trading at $21.75. Kind of just chopping around at where you were on Friday in terms of gold. You see the acceleration on the Fed up to 22.25. Quite the pullback on Thursday. And yeah, we're just chopping around at those price levels on gold right now. You check out notes and bonds. Pretty tame action right now. You're talking about a 10-year with a yield of 4.23, we'll call it 4.23%. As yields somewhat unchanged, you got a little bit of lower price, higher yield, but as you see, backing off from the 110.30 price point that we closed out Friday's action on. You got to take a look at the VIX this morning. VIX, pretty interesting, this line in terms of where we are right now. 1351. We have an elevated VIX as you have a pullback in the market going on right now. When you take a look at the daily, okay, I've been talking about a series of higher highs, higher lows in the VIX. You break through that level on the Fed. Okay, markets accelerate higher, volatility gets sucked out of the VIX, you trade lower, and just like that, we're kind of pushing those levels. Going to be interesting to see if maybe that was a false breakout to the downside on the VIX. Maybe we're coming into a little bit higher volatility premium. We got a couple news stories driving some of the action this morning, and it is interesting that this market is going to have to gear up for a pretty important data point on Friday. You're going to have special sessions on Bloomberg Friday morning, even with the market closed, as it's going to be an important data point that gets released Friday morning. PCE, the Fed's preferred inflation gauge, and especially important in light of where we are in this market, in light of what the Fed just said on Wednesday in terms of they still imagine we get 3 cuts coming down the line. And yeah, we get to find out where we go from there. All right, where are we going to kick things off? Let's kick it off with Boeing. Why not? Their CEO, he's out, but not until the end of the year. I guess on an organization like that, they need a little bit of time, but somewhat surprising considering the constant barrage of negative news that continues over and over, even anecdotally, just discussing with friends, with family, everyone is aware of the woes on Boeing, even this weekend, okay? Now, Boeing catching a little bit of a lift. You're up by $7. News out there, Boeing CEO to step down as the fallout grows from the safety crisis. But interesting, okay, that he is going to leave the company at the end of this year. That's more than 8 months away, folks, okay? You got the chairman is not going to stand for a re-election of the board, so he is out as well. You have the gentleman who leads Boeing's commercial airplane division. He's also going to retire, but that's going to be immediately, okay? You got the COO is going to take on that role of Stan Deal, who is in charge of the commercial airplane division. And yeah, Calhoun, a long-time Boeing director, veteran of GE, Blackstone, ending his time as CEO. As you could just go over and over and over the number of problems that they got going on. And what is interesting is the writing was kind of on the wall last week. This article dated March 21st. So what day is that? Thursday or Friday, I believe? Yeah, Thursday, talking about that the board was planning to meet with the airline chiefs without their CEO, if that was not a sign of things to come, right? But he's in there until the end of the year. He's going to be the CEO for 8 more months of that company. Not sure how that makes sense. So you catch a little bit of a lift, but they got some problems going on, to put it lightly. News out there that he is gone by the end of this year, not by the end of this year, at the end of this year is how they actually phrase it, not by the end of this year. He will leave the company at the end of 2024. The chairman's not going to stand for re-election, and you have the lead Boeing commercial airplane division gentleman, Stan Deal. He's also retiring. That one's going to be immediately, and the COO, Stephanie Pope, is taking over the role of the head of the commercial airplane division. We'll see. 8 months is a long time for that CEO to still be in control when you think about the fact that they got doors popping out of planes at 15,000 feet. I mean, I was talking to somebody this weekend, and just anecdotally, nothing to do with this story, okay? Nothing to do with the fact that we knew that the board was going to meet with the airline CEOs without their CEO, okay? And just saying, man, could you imagine the story going on if anybody had actually died on that United Airlines flight when the door popped out? Could you imagine if the door popped out at 35,000 feet as opposed to something like, 15, 16, 17,000 feet that it popped out at? That plane had been flying for a period of months. So it had many, many trips where it had been at altitude levels of 35,000 feet. It had been on trips. Can you imagine if you were in one of those planes where it was there? Could you imagine the people who were actually sitting on one of those, right next to that plug that popped out? Yeah. Pretty remarkable, man. Not sure how he's still in there for 8 years. You could almost say that they've been fortunate, which is remarkable when you think about it. Nobody injured on a door just popping out of the plane. He's still in there for 8 more months. They can't find records of the doors. So, yes, Boeing is getting a pop, okay? But that is my introduction to saying be careful for Boeing shares, man. They got a long way to go. You're back testing the lows of October. Meanwhile, the market is up something like 26% over that period of time. Boeing's going to catch a little bit of a lift today. You're going to be pushing 196. You got a gap out there. The low is 198.46 from March 8th. Yeah, but I would not be giving that thing any confidence right now, man. Who's going to step into that role? And boy, is a mighty one. And consumer sentiment across the board, very difficult as they got some woes. But the CEO, you could say about time on that one. S&P's negative by 15 points right now to kick off the trading session. Stay tuned, folks. We'll be right back. We got a lot to talk about. Monday action. Stay tuned. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
This portion of the morning market kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC. Welcome back, folks. We got the S&Ps off by about 15 points right now. Markets in the red. You got the Russell up by about 3 points. We jump to some of the tech giants. You got Apple continuing the slide this morning. You closed Friday at 172.28. I think it was Friday. I was listening to my dad's program. He had some numbers out there on Apple, and boy, it would be a head shaker if it pulls back substantially to some of the numbers that he was talking about. Yeah, I think it was in the 130s, 120s, not sure, but it was quite a steep decline in terms of you break below where we were in October. October, you had a low of 165. We're going to open at 171. Remember, folks, the market's up like 27%. That's the S&P 500. All right, you jump over to the NASDAQ 100. Look at this thing. In October, it was sitting at 14,100. You've just gained 4,300 points, almost a 30% acceleration, and over that same period of time, what was once the largest company in the world, basically flat from where you were. Up a bit, but you're going to open down another $1.20. We back things up to a 15-minute chart. You see the slide overnight for Apple shares. You're pushing 170, 108. You're negative with the market. Apple's going to open down basically with the NASDAQ 100. NASDAQ 100 off about 0.6%. You got Apple trading down, $1.20. And that is on the heels of Apple, Google, and Meta probed by the EU in a test of the new digital law. Now, digital dominance, okay? How about 10% of global revenue? And just for a quick glimpse, Apple 2023 global revenue almost $400 billion. Number I have out there is about $383 billion. Meta, $134 billion is what they pulled in for revenue in 2023. Google, $305 billion. You're talking about 10% is the number that they can throw out there. Pretty remarkable. And they're going to face the risk of potentially, that would be a hefty fine, folks, when you're talking about tens of billions of dollars. As the EU opened a full-blown investigation into the firm's compliance with strict new laws reining in the power of big tech. Pretty interesting how on the heels of in the US going after Apple, of course, and then you have in the EU, they're coming as well. The EU, the European Commission, said Monday that Apple and Google's App Store rules will be targeted in the first probes under the bloc's Digital Markets Act, how Google search results might unfairly preference its own services, and how Apple may make it harder for users to choose alternatives to its Safari browser. I think we all know that that stuff is pretty much happening, okay? Whether it's to the point of anti-competitive, monopolistic, breaks the rules, etc., that's going to be the debate. But you know that they're trying to steer you into their own products. You know that Apple is making it harder for users to choose somebody else's browser as to their own, okay? You know they're trying to keep people into their own app store to take the 30% fees, etc. New subscription fees from Meta's Instagram and Facebook platforms will also be targeted by the probe, which could hit firms with fines of up to 10% of global revenue or up to 20% in the case of repeated breaches. It's quite a number, man. We suspect that the suggested solutions put forward by the three companies do not fully comply with the Digital Markets Act. Is that what it's called? Let me get that one. We better learn this one, man. Yes, Digital Markets Act, the DMA. EU antitrust chief said, she added that the probes involve serious cases. Of course, you got spokespeople for those companies saying it's confident that it complies. But yeah, as they put it right here, 1-2 punch with the sweeping antitrust probe in the U.S., where the Justice Department and 16 attorneys general sued the firm last week. And boy, there was quite a reaction at Apple last week when that happened, man. Daniel Friedlander, who heads up the European office of Computer and Communications Industry Association, whose members include Apple, Google, and Meta, said the timing of the probes so soon after the DMA came into force suggests the commission could be jumping the gun. You telling me these tech companies don't know what rules are coming down the line, man? You're talking about, $2 trillion, $3 trillion companies almost have no idea of the laws that they're about to need to comply with. Nonetheless, the battle is on, folks. Under the DMA, 6 tech giants, okay, are subject to a range of new prohibitions and obligations. Apple, Alphabet, Amazon, Meta, ByteDance, and Microsoft. For Apple, that means having to break open its previously closed iPhone app ecosystem and allow users to download software from other online stores and from the web. So the battle is on, man. The world is changing. Apple, as we speak, dips below 171. We jump over to Meta shares. This thing is backing off a bit. You were at 510 almost. You're going to open at about 506. You jump over to Google shares this morning, off by about 70 pennies, 150, 107. Now, taking a look at Apple, as I mentioned, there was a slide last week, man. You were pushing 177 before that news. You're now at 171. Yeah, quite a pullback, man. I think Apple's got just more than 15 billion shares, I think. Let's get into the fundamentals here. What are they pushing right now? Yeah, 15.4 billion shares outstanding. This thing's down about $6 from where you were last week. That's almost $100 billion in market cap, wiped out in a period of what, Thursday, Friday. Pretty remarkable, those numbers, when you take a look at it in that perspective. All right, let's jump around and see what else we got going on. It is interesting, even these articles, right? They don't stop, I'm sure. Can you imagine being in the PR for Apple as this just onslaught continues? This goes back to the DOJ. Now, this one's out this morning? Yeah, this morning, 7 o'clock this morning, man. Talking about the DOJ in part of their argument, okay, is blaming Apple for the lack of super apps like WeChat in the U.S. Not sure that's the case, okay? Things obviously are very different in terms of how members of the United States in the U.S. kind of adopted different apps, where we were versus China, where they all came to fruition all at once. We were used to pulling up different apps for different services. We had already become accustomed to those apps that we use for different things, like shopping, like payments, like search, versus in China when they explode all at once, right? They were able to create super apps. Now, Elon's trying to do that with X, not exactly going as he imagined and as he pitched investors when he took over that company. But nonetheless, this is talking about, in the U.S., it's a garden of small apps. But yeah, they talk about Elon. There you go. And Zuckerberg dreaming about the success of WeChat. Tencent Holdings blockbuster mobile service. WeChat, 1.3 billion Chinese consumers. folks, I think, well, what do we got in the U.S.? Like 350 million people, almost 400 million people, something like that. Meanwhile, WeChat alone is used by 1.3 billion Chinese consumers, and they use it for everything. Okay, messaging, music, shopping, gaming, hiring, and bookings into a single hub. It never took off here. The DOJ they're just pushing everything. And that's kind of the point of bringing up this article, man. Even the ones that seem a little bit harder to prove, right? We all know that they're anti-competitive in terms of they want people to use Safari, okay? They want people to make sure they're paying on the App Store versus paying third parties where Apple doesn't get their cut. But the DOJ is even pushing the fact that, hey, man, they are pushing anti-competitive policies that are making it difficult for any app to gain traction and changing the way we do business versus other countries. So this is going to be a saga, folks, okay? They're coming at them, and it might just be the beginning. And pay attention to this chart, man, because, boy, it is a tough one in the light of everything else accelerating. Stay tuned, folks. We got 3 minutes till the opening bell. We're coming back for Monday action. We still got a lot to talk about. Don't go away. Be right back.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got markets open. You got the S&P down about 15 points to kick off the trading session. As I mentioned at the beginning of the program, shortened trading week. Markets closed for Friday, for Good Friday, coming into Easter weekend. But it is interesting. We get such an important data point with the PCE, the Fed's preferred inflation gauge, coming out Friday morning. Interesting to see how the market will trade into that news, even though it will not be open with exchanges trading on that day. Nonetheless, we'll see how we go. Look at the Russell. Catches a little bit of a bid on the open. Back to a 5-minute chart. A little bit of a pop with the Russell up to 2102. All the markets sitting in negative territory besides that. We jump over to the VIX. Slightly elevated action. Keep your eye on the VIX this morning. We're trading at 1350 right now. Bitcoin back above 67,000 on a daily basis, right? What have we done? Just a 236 pullback, man. Okay? 382 could be in the cards. That is nothing. And that's a nice round number of 60,000 from the run you had up. Pretty remarkable. From January, you go from 40,000 to 75,000. So don't be distracted if you get some pullbacks, folks. This thing just almost doubled in price over a period of 2 months, 40 to 75,000. Crude a little bit higher this morning. Higher highs and higher lows for that crude market. We're pushing 81.50, up by 87 pennies for crude, and the gold contract catching a bid as well. Keep your eye on gold. Gold as well. February 14th down at right about 2,000. 1996.40 is the low on the futures in gold. On February 14th, Valentine's Day, you run up to a high of just above 2,200 on March 8th. You spike higher on the Fed at 22.25, and we're catching a little bit of a lift with gold up by $16. Now, we have a little bit of dollar weakness this morning. There's your dollar. Yeah, a little bit of weakness. 104.22 right now for the dollar. You were up almost at 104.50 for Friday action. So we got dollar weakness right now, and the dollar weakness coinciding with a little bit of lower price, higher yield as the market's just chopping around. Marginal moves right now, but gold nonetheless catching a bid up by $17. All right, and we're going to stay on. Let's check out some of the equities. Yeah, look at it. The market's saying the same thing. Hold on one second, man. That CEO's not gone yet. He's in there for 8 more months. Boeing rips lower on the open. We're still up by 2.2%. Yeah, but be careful on that one, folks, to put it lightly. And jumping to the airlines, United, they're down by 4%. Man, it's got to be so tough to be kind of a casualty of Boeing right now. But guess what? When you're an airline and you choose to do business with Boeing and you're choosing to do business with an airline that isn't even, fastening plugs that are supposed to be doors where they just pop out in the middle of the sky, the FAA might say, hey, you know what? You got to hold on a second and take a look at that. News out there. United faces a threat of curbs on new routes with an FAA clampdown. So I think this one was out this weekend. Yeah, Saturday, updated this morning, it looks like, probably updated with the news of the Boeing CEO. U.S. aviation authorities are considering drastic measures to curb growth at United, including preventing the carrier from adding new routes following a series of safety incidents. So the FAA has discussed temporary actions it may take with the airline's leadership in recent days. In addition to route restrictions ahead of the all-important summer travel season, United may be barred from flying paying customers on newly delivered aircraft who ask for, according to people. Imagine that, right? They can't even fly customers on new planes they're getting delivered. God knows when they place those deliveries, it takes years to get the planes that you're talking about. The FAA is suspending United's ability to approve and promote pilots to fly different aircraft models. The proposed clampdown would effectively pause growth for an unspecified period at one of the largest U.S. airlines, underscoring the heightened scrutiny on commercial aviation safety following, that near catastrophic Boeing plane where they just had doors popping out of planes at 16,000 feet or whatever it was. So United, they're in the crosshairs, man. Yeah. The FAA plans to pause a variety of certification activities for a period of time. That is open-ended, man. The limits under consideration would restrict United from adding new routes beyond those the airline has already sold tickets for. Whew, it's a big one, man. Yeah, there are now regulator-imposed restrictions on our ability to operate and grow our airline. We will also see an increased FAA presence in our daily operation. The market does not like regulations, folks, across the board. And look at that. Yeah, you drop lower even on the open. United down by 4.2% right now. You put this on a weekly, And boy, there's plenty of room to the downside for United right now. You're chopping around in the middle of a range. Look at this pullback you had in the middle of 23 where you went from $60 to 35. You're sitting at 45 right now. You're down by 4.2%. We jump around to some of the other airlines. Delta down about 0.6% right now. American Airlines down by 0.8%. The market is negative, all right, but United by far the biggest problem when they're dealing with those Boeing airplanes. Pretty remarkable, man. And the market catches a little bit of a lift. S&P's down just 12 right now, 0.2%, trading at 52.81. But boy, since we spiked higher in the middle of the day Thursday, since you got that acceleration, not exactly indicative of tremendous strength, as that is a pretty well-defined channel line, man. Let's just add a simple trend line here. On the upper boundary line, what are we looking about? Maybe something like there. On the downward boundary line, something like there. Yeah, keep your eyes on the S&P, man. We're sitting at 52.81, and we'll see if we can hold these levels as we're backing into. And on a Fibonacci basis, if you just take a look at the pop that we got from the Fed, you're now below 50%, almost coming into the 618 of that move that we got on the Fed acceleration, where they're still thinking we get 3 potential cuts this year, but that may change when we get the Fed's preferred inflation gauge Friday morning with markets closed. Okay. What else we got going on? Let's see. We're jumping around. Yeah, we talked about United. We talked about the EU. Oh, this is a good one. All right. Intel and AMD. So, shouldn't be surprising. Okay. This report out this morning as well. They were both lower this morning. Let's see how it goes on AMD and Intel. AMD shares, they catch a bid on the open, only down by 2% right now. You jump over to Intel shares, down by 3.8%. We check in on NVIDIA, actually positive. Can't hold NVIDIA down. 945. Look at that thing, man. You got an all-time high of 974 out there, just holding up so well. NVIDIA shares up by another $3. But this story, and again, should not be surprising. After a report that China, so you got AMD and Intel, trading lower, China has adopted new guidance to limit the use of U.S.-made microprocessors and servers in government computers. Looks like it's going back and forth, right, as the battle is on in terms of who controls what here, in terms of the two different governments putting restrictions on terms of the other countries' technology controlling. The new rules mean that chips made by the companies will be gradually replaced with local alternatives, citing guidelines unveiled by the Finance Ministry and the Ministry of Industry and Information Technology on December 26. Software provided by U.S. companies, including Microsoft, are set to be replaced. Still, for now, there remains some flexibility. Microsoft and Intel declined to comment. China has been pushing to eradicate key overseas technology from within its most sensitive organs over the past year. And yeah, this is just going to continue to play out, man. Surprised NVIDIA isn't taking a bigger hit there, as they obviously trying to build chips in the same capacity. There's only a few people that are pushing those types of chips out. But guess what, man? That's not going to be the case going forward, as in, you know, China's going to want the best of the best. AI is the future, and, you know, it almost comes into whether it's defense, whether it's everything in terms of what AI is going to control. But nonetheless, we got lower prices for AMD and Intel, NVIDIA positive. We'll be right back, folks.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the Opening Call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening Call subscribers also receive access to dozens of Basil's educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We got the S&Ps off by about 16 right now. You check back to NVIDIA, a little bit of a slide. NVIDIA down $4.54 to negative prices. We check back in on the chip stocks. Intel down about AMD off about 2.4%. Intel shares off more than 4% right now. We check around to some of the other magnificent stocks, and yeah, they're weighing down, man. Look at Meta off by $10 almost. That's 1.8%, sitting at about $500. You got Google shares. Ooh, watch out, baby. NASDAQ 100 off about 150. Google shares off by 1.8%. Apple shares breaks the 170 batter, 169.63. You're off by another $2.65, off by 1.5%. You check out Amazon shares, down about 0.3%. We jump over to Tesla shares. There's a lift for you, up by 1.8%, 173.97. And you jump over to Baidu. So Baidu was higher by about 0.5%. They pull back a bit. News out there. Baidu shares rise after reports that Apple will use its AI services in China products. Chinese regulators have to approve generative AI models before they can be launched to the public, so China's got to be in on it. Not surprising there. But Baidu shares rose sharply in Hong Kong after reports of possible collaboration involving AI between the Chinese tech giant and the smartphone giant Apple. Now, I was listening to a great conversation on Bloomberg at one point last week, and one of their analysts was talking about, the question posed was, hey, kind of seems like Apple is behind the 8 ball when it comes to all of this generative AI, LLM, large language model innovation, and they're teaming up with some of the other players in the industry to make sure that they remain competitive. And the point made was that it might actually be the best way to get things done when you think about the fact that you really need those large language models, and the best way to do it might be teaming up with certain players in each country that might have the best data for that individual country. And we are so early in the phase of where we are with AI, LLMs, etc., that don't get caught up on where we are today, where we are tomorrow, next week, even next month, even next year, because this is something that, yes, rapid enhancements are being made, but when you think about the early phases and where that's going to lead in the future, this might actually be the best way to actually have the best form of technology built in. I mean, we saw the news out there that Apple might team up with Google in the US. They're going to team up with Baidu in China. They're going to make those partnerships with the leaders within each country, and maybe that's the most beneficial path forward at this point in time. Nonetheless, Baidu pulls back a little bit on that news, and Apple is dealing with their own woes, to put it lightly, in the U.S. as we got a little bit of a pullback to kick things off on Monday trading. You check over to Apple shares off by 1.4%. Off $2.42. And again, always remember it, about 15 billion shares outstanding, man. So you're talking about what? $37 billion market cap hit for Apple shares to start off the trading week. All right, you jump over to Disney shares. There's a lift for you, man. Disney up by 2.5%, $2.86 to the upside for Disney shares. And the news out there for Disney, as they get an upgrade from Barclays, the media company, to overweight from equal weight, Disney has further upside even after its outperformance this year. Separately, you got Blackwell's Capital released a letter criticizing Nelson Peltz and urging shareholders to vote for its own board nominee. Now, we do have some Disney in my newsletter, Rocket Equities and Options, folks. For full disclosure, Disney on a run from $78 up to $118. This year alone, up from about $90 to $120. Still well off. Back this up. Well off. I think I got to go back even further, don't I? Yeah, I got to go back even further. It's more than 3 years ago. Is that right? My goodness, just more than 3 years ago. Disney is off. Its time is amazing, folks. I can't believe it. You put it on a 3-year weekly. I like that chart. Doesn't even get you back to the highs of Disney, man, compared to where this market is. Highs in Disney, 203.02. Stratospheric run coming out of COVID. Stratospheric decline back to $80. You're pushing about 118.64 on a monthly basis, but Disney shares pushing 118.66. The thing to remember about Disney as well, if you're a longer-term investor, which is what we're really looking for in my newsletter on that equity, is in the next 12 to 24 months, man, you come into 2025, late 2026, you're going to have a movie slate that just might be gangbusters in terms of where are the Star Wars movies, right? We got 2 Star Wars movies, I think, coming down the line in maybe 2026. You're going to have another Avatar movie out there. You're going to have some Marvel movies that might actually deliver. It has been quite a drought in terms of where movies are. But where are the Star Wars? Something like that. Where are those generational type movies? Nonetheless, Disney shares pushing 118.70, up by 2.4%, continuing an increased price action, even in a negative market day on Disney shares. All right, let's keep our eye as we jump around on some commodities and some dollar action. Dollar, 104.19 right now, backing off a bit. We got a little bit of dollar weakness. We jump over to the gold contract. That's putting a bid in gold, up by almost $19. Folks, if you don't have a little gold in your portfolio, probably not too late to add some gold to your portfolio, man. You take a look at gold on a longer-term basis, right? We're sitting at the same prices you were sitting at in 2011. It's 2024. You think about where we are, you think about inflation, you think about what an ounce of gold could buy you in 2011 when it was trading at $1,800. Nonetheless, you consolidate. Gold consolidates for 3.5 years, pushing 2,000. And we finally made a decisive break to 21.78. Now, backing things up to the dollar yen. Backing off a bit from that critical area. Dollar yen pushing 152. We traded to 151.90 back in November of last year. You just got a spike high to 151.85. It is pretty remarkable, folks, sometimes if you really have patience in a market, how we can trade within pennies or single points. Sometimes the S&P, I tell myself, if you're trading S&P futures and you got enough patience, sometimes all you got to give yourselves, folks, is a 5-point stop in the S&Ps, because boy, it is remarkable sometimes how it lines up. You got the dollar yen trades to 151.85. You got a high out there recently of 151.91, we'll call it, back in November. Slight rollover, and that is on the heels of the first time they hike since 2007, but a dovish hike. They're going to take some time, but boy, imagine if they really get some room to hike, folks. They're at what, 0.1%? Is their rate? What are we sitting at? 5.25 to 5.5 is our rate, and they're sitting at 0.1% right now. Yes, they're going to wait, make sure that the economy is going to be accommodative to those hikes. But on a longer term basis, look where we are in the yen. That backs it up to 2004. Okay? There is a rapid chance that, yes, you can push 160. Maybe you can push 155. Maybe things can get a little lofty. But boy, on a historical basis, man, they are hiking since the first time since right around 2007, okay, and look at the price action in the dollar yen, compare it to where we are elsewhere, compare it to the fact that the Fed is still thinking we're cutting 3 times this year, okay? And even if we're in a higher for longer policy rate, the Japan rate is still sitting at 0.1%, and I imagine that is going to continue to rise. It has to, folks. I think we all got a quick lesson that where we were with rates at 0 and negative, we're not going back there. And I think over time, Japan's going to have to face the same thing because the economy does not work when you have rates at 0%. It's just not built that way, man. If you know modern fundamental economics, man, you either consume or you save. And if you save, you're supposed to be able to consume more in the future. That's the whole fundamentals of economics. S&P's off by 13. NASDAQ 100 off by 108. One more segment, folks. Don't go away. We'll be right back.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the Opening Call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening Call subscribers also receive access to dozens of Basil's educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got the S&Ps just hanging out where we kicked off the trading session, essentially. Negative by about 12 points. We're trading at 52.80 right now. You drive down to 52.75 on the open. NASDAQ 100 off by 95. Let's check in on some of those tech stocks. As we get a little bit of a pullback, a little bit of a bounce. Apple off by more than 1% right now. We check in Microsoft, 1.3% to the downside right now. Google shares 1.2%. You jump over to Meta, off by 1.1%. These have been the leaders. You start getting a cycle. Well, we get a rotation, man. Even AMD still off by 1.4%. with their pop on the open. Intel off by 3% right now. NVIDIA shares, yeah, nothing like NVIDIA, man. Up by 1.5%. Can't hold down NVIDIA. 956.80 for NVIDIA shares. And Tesla was getting a pop this morning as well. They give back some of that pop. Be careful on Tesla shares, man. I was talking about with a friend this weekend. Boy, what happens, man? Not a lot getting written about the story that should be out there in terms of where Tesla might trade to and what the margin call might look like if Elon gets a margin call on the shares he has for a loan, considering that $55 billion pay package that got pulled. Yeah, not sure how that happens, but Tesla holding up somewhat well at 172. But I think if you get in the ballpark of about $100, man, he might be facing some margin calls. Now, what is remarkable is he takes so much heat for taking shares out of Tesla and buying Twitter for $55 billion, but he doesn't get enough recognition for taking those shares out of Tesla at $400. So yeah, even if he just held on to that, okay, he's losing more than 50% of the value. Always pay attention to insider trading, folks. They know more than you know usually. And yes, whether they're buying, whether they're selling, etc., pay attention. We jump over to Foot Locker shares this morning. There's a lift for you. All right, Foot Locker up by 8.5%. They get an upgrade at Evercore ASI. Foot Locker's gaining share in the U.S. and Europe and should have more positive developments in the coming years, how they put it. You put this thing on a daily, though, you talk about a drop-off, man. From 34 on their earnings down to what? What was the low there? 22. You're back to 26 right now for Foot Locker. And let's check in on Darden. Yeah, be careful on Darden as well. Darden off 1%, but declining same-store sales, a big problem. And congratulations to ex-President Trump, as I guess he won both club championships at the right age of whatever he is. Pretty remarkable blend on that one, folks. 11 hole-in-ones like the North Korean dictator. Have a great day, folks. Basil's next. We'll see you tomorrow.